Welcome, it's denome. In this video, you will learn how to draw lines on a chart when you are trading or investing. And these are extremely helpful when you're looking for a potential top of the market or a potential bottom of a market. And sometimes they are not 100% right. There's a lot of nuance to it. But in this video, I will share you all of my secrets about charting, about horizontal lines, vertical lines, and even some chart patterns. So without further ado, let's actually get started here. And I'm using a website called tradingview.com. This is a free website where you can create an account, and if you do, you can save your settings on the chart, which is absolutely beautiful. There's a link somewhere which you can use. You don't have to use my link if you don't want to. I personally use the free account anyway, so that's what I suggest, so I'm not getting money. But if you want to help me, I will get maybe something if you sometimes decide to buy something there. But anyway, that's my promotion for that time, and make sure to actually like this video, subscribe to the channel, because if you do those things, that will broadcast to the algorithm that this video should be seen by other people as well. So if you do that, that will be very, very kind. Now let's start talking about charts. First off, let's talk about horizontal lines. And for this, we are looking at Bitcoin, and we will be looking at S&P 500 quite soon as well. Those are enough for you to basically understand how these lines work. So horizontal lines, where you would place your normal horizontal lines is at the top of the all-time high. That's where I would put the first line there, just to basically get started, and we can fine-tune the lines as we go forward to basically understand the most likely price action in the near term. So this would be the all-time high, but because we have had a previous all-time high, you can draw it here as well. And this is quite nice because now we're basically cross-cutting not only this high, but we're basically cross-cutting a lot of price action, recent price action. And right now we're even cross-cutting the most recent price action. If Bitcoin price would go above this line, it is extremely likely that Bitcoin price will continue to go to the upside if this high is broken. But basically under this line, if we are like $67,000 Bitcoin price, that is likely that we will have a rejection. Not necessarily true, but it is likely. The next place where I would put a horizontal line is basically under this wick here, which is the range low. So basically a range high and a range low is where I would put my horizontal lines. And it is nice if you have some old price data. For example, when we extend this line here, and this is one line that I actually used in a video of mine not too long ago, when I predicted that this bottom was it, it's time to buy Bitcoin, is I drew a horizontal line from here to here, and I thought that it's just likely that this is the bottom because it is the perfect retouch of a breakout level. So that's why I called it the bottom back then. So now we're currently in this zone here, channel, whatever you want to call. And since we are in the channel, the top line is called a resistance line and a bottom one is called a support line. Now, if the price would fall under here, because the line is now above the price, then it would not be a support line, but it would be called, it has turned into resistance. So you always have support and resistance. Resistance line is always above, support line is always below the current price level. So those are that. For other horizontal lines, you could draw a few lines here or there, wherever you want. But here was a interesting line from here to all the way down here, basically cross-cutting all of this price action. But since we have a price action a little bit higher, it makes sense to actually move this here and basically emphasize the most recent price action over the past price action. I think it's better to emphasize recent price action over past price action just makes it more beautiful on the chart first of all, and just more likely. So these would be my horizontal lines. I would not put horizontal lines on the bottom here, because it's very extremely unlikely that Bitcoin will ever go to 15,000 again, because when we take a look at the history of Bitcoin, going all the way back to 2009, these bear market lows are never ever hit again. So if that would happen, the nature of the beast would be completely different, and we would have to rethink completely what we think of Bitcoin. So as of now, because this nature of the beast has never changed, I don't think it will change now, so that's why I don't draw a line here. So basically now we're looking at a three lines here that would be considered important in my opinion. I guess one more you could draw at the bottom of this wick here as well. Let's see if it has any relevant, doesn't really have any relevant price action from before, where it has clearly had a reaction. Maybe this one, but not exactly. You could draw it, but as of now it doesn't really matter unless we go below $47,000, which I don't think we will, by the way. But it's always possible. I just don't think it will happen, or I think there's a very little possibility for that to happen. Now you could go into a smaller time frame, like daily view, and you can draw a horizontal line here as well. For now, I would basically draw a horizontal line here. So if I would be trading, if you have a stop loss below this line, that would be a pretty good idea, since this was a massive move to the downside and we already had a pullback from there. So it's quite likely we will not break this anytime soon. Like a similar thing happened here. We went to this price low here. If you had a stop loss below it, you would not be basically cancelled out from this price move here to the upside. So this would be a short-term trend line that you could draw here on the chart as well. You can go even lower and lower and lower if you want, but those are basically horizontal lines. And now before I show you trend lines, I have to say that I'm using the logarithmic view of Bitcoin. And I may be losing some people on this video right now, because I know some people just swear to never ever ever use the logarithmic view. What they want to use is the normal view, which looks like this. The problem, let me go to the weekly chart. The problem with the non-logarithmic view is that all of the data from 2017 to 2009, it gets completely lost. This is absolutely just gone in the wind, cannot use this data for anything. This is useless information. So for me to have more data, I like to use the logarithmic view so I can get the whole chart in my view. Also, when we start drawing the trend lines, this will make more and more and more sense why I use the logarithmic view most of the time. Let's say 90% of the time I use logarithmic view. But here are the horizontal lines that I would personally draw on the chart as of now. Maybe you could draw a horizontal line here as well. So basically this would be your take profit level, maybe some way a little bit lower here. This would be your take profit if you are trading just in the short term, like a day trading or something like that. Anyway, these are the three most important ones that we can find. So the rule is find a range high. What would be the range high? In this case, it would be this price point here. If you can back it up with previous price reactions, that is also important. Now, some of the questions that some people have is, should I use the wicks or should I use the bodies? Personally, I would use that which has most amount of price reactions. So it could be the body or the wick. I kind of use a hybrid, but I do value wicks more than the bodies, because then I can get basically the full price range rather than just the bodies. And the bodies, they change depending on the time frame that you're looking at, whereas the wicks are the same in all of the timelines, or all of the I don't know what to say, I forgot it. Anyway, when you're looking at 1 day candles or 1 week candles or whatever, the wicks will never change. They are always the same, whereas the bodies will change. All right, so I think that's it for the horizontal lines. Now let's start talking about vertical lines or trend lines. So for trend lines, let me take out these horizontal lines now so it won't be too hard on the eyes. What you can do on the long-term view is establish or find repeatable patterns on the chart. So one thing that I found before is that I found that you were able to predict the top of the bull market based on what happened in the previous bottom of the bear market. So when I actually connect the lows here, that was basically able to predict the top of this line here. It's not as beautiful here in 2010, 2011 here, but it will get better as I show you how this has worked. So from here, this was able to, if you just connect these lows here, this was almost able to predict the top of the 2017 bull run. So when everybody and their grandmother was bullish on Bitcoin, this would be a time when you saw the chart and you should have been like, hey, wait a minute, it's getting a little bit too heated. I should consider getting out. And this thing has happened before or another time. So from this low here, when you just continue to follow the bottoms here, you can find something interesting. You were able to, sorry, I actually drew it wrong. It's even better when I, now we're looking at the bottom here, follow it up, you were able to predict the 2021 top here as well. So this is absolutely crazy, but it doesn't end there. You can find it repeated again. So when I actually take this low and just continue this, we were able to predict this top here again. So this is just very, very beautiful. And this will become relevant as time goes on and we go into 2024 and 2025. If we go and visit this line again, that will be where I will be taking my profits off, by the way. I don't care what other people say. This is where I will be taking profits out from the market, unless obviously something crazy happens, like United States starts buying Bitcoin or whatever. But just looking at the trend lines, you can see some repeatable patterns here, and I think it's just beautiful. Next thing I can do with trend lines is basically find out when a bear market has ended. So how can you predict when a bear market has ended? Is you simply take the top of the bull market and make a trend line to the bottom. So usually you see quite soon after the top here, when you just draw a line and you extend the line further, simply do not buy Bitcoin until this trend line has been broken to the upside. If you had done that, and here is where you got your Bitcoin, you would have gained a little bit of a return on your capital, 35,000%. So that was a nice time to buy, but this has repeated many times. So here you can see another one. You can see that you buy Bitcoin basically after the breakout. We had a fake out or a retouch of this trend line here, and then we went on a nice bull run. You can even use it in a shorter time frame. So here, once this got broken, that's when basically the bull market continued. It has happened here as well. So now you can see after this got broken to the upside, you can see very strong price move right after that to the upside. And also you can use the same top here again and simply follow this top again, and you can see another nice breakout move and a retouch to the upside here again. So you can basically predict the bottom of the or the ending of a bear market with this strategy here. And just most recently, this was a beautiful one as well, from 2021 to basically here 2023. This was the starting of the bull run, a retouch once again, the same exact pattern every single time without a fail. The same exact thing just repeats and repeats and repeats, and then we had the bull run here. So this was beautiful, very, very nice price action, and just a simple chart, simple line on the chart, and very easy to follow. If you can just follow this strategy alone, you should be making a lot of money, this strategy alone. And you can use it in a shorter time frame. So let's actually go to 1 hour time frame and use the same exact thing. So let's take a look at from here to here. We haven't had a pullback yet. So what we could have is we could have some price move here, pullback, and then we go to the upside. So that could happen. Sometimes we do not have that pullback, by the way. Sometimes price just continues to go to the upside regardless, doesn't need to have a pullback. Another one here, the same exact thing, then a bull market. Another one here, you can clearly see a trend line here. So now you can just touch these tops here, and this was the breakout level, and then we went to the upside again. So you can use it on all of these different time frames. It's a very, very easy. You don't have to have any. You don't have to memorize all of the chart patterns or anything like that. Just from the top to the basically bottom, just follow the wicks all the way to the bottom here, and then get bullish when that breaks. It doesn't always obviously happen, but it is a pattern that repeats. So sometimes it works, sometimes it doesn't, and sometimes when you spot it on time and your trade setup is in the right place, you can make very, very nice trades. You can use it the other way around, by the way, as well. So when we drew these lines from these bottoms here, basically to see where is the support for this bull market, sometimes you can see an acceleration of the bull market. So here you can see an acceleration happening. And when that acceleration ends, that's basically where the bear market actually starts. So first you have like a solid phase, and then you have the acceleration phase, or maybe you can call it the blow off top phase. And then when that breaks to the downside, that's basically the end of the market. Here you can see a similar thing again. So this was the normal market, normal upwards market, and then you can see the acceleration here, and then we basically went out of it. So this was like a double cycle. I don't know what they call it, but it was a weird market. Another one here, you can use it from this bottom here to basically see when the price move was done, and then we entered into a nice pullback here. Another time it happened was, again, here you can see like a normal market move, or you can even use it like this and discount this extreme pullback here. Whatever you want to do is fine. But anyway, here is the acceleration part, or the blow off top part. If you had followed this trend line here, you would have been able to exit at roughly $55,000 in 2021, right at the peak of the bull market. So that was very, very beautiful price move there. Recently, we had a similar situation. So we had this normal market here, and then we had this acceleration, and then we went to the downside, and we had a pullback. So it happened just recently, not too long ago as well. So now we don't know if this will break to the downside. If it does, that will be very bad, but I'm actually betting that it will not break to the downside. But let's see, the markets are quite shaky. It could still break to the downside, so there is always a risk that it will. But all in all, this is where if you were following my market updates, I said, oh my god, this is bad, this is quite bearish for Bitcoin, and that's when we had a pullback here. We were looking at on-chain data, so we were able to spot this bottom here. We were actually able to predict this bottom, and most recently we were able to predict this bottom as well using many different data points. But all in all, that's beyond the scope of this video here. I'm just using the charts, and you had to use on-chain data and many other points to actually find out that they were the bottoms. But if we go to like a 4-hour view, you can find just like it's not that difficult to see. Let's see here. When you see something like this, you see like 1 touch, 2 touch. When the price comes back to this line, you're like, okay, maybe it will have a rejection here to the upside. So calling this a bottom just made a lot of sense from that perspective. But we used a lot of data points for that, so I'm not gonna rehash everything we did to basically analyze. Another place was, here's another line that basically coincided. It was a little bit like a bigger move to the downside here, but then an immediate reaction to the upside. So after this pullback, you could have basically entered up here as well from this trend line here in the short term. So all in all, you do need a little bit of artistic eye to spot these different things, but just find repeatable patterns that repeat on that asset many times. If you can find them in the past, it is likely that they will repeat in the future as well. Now let's actually talk about different chart patterns, and for that I'm using a cheat sheet here. So here are some patterns, and the only pattern you have to understand is head and shoulders and inverted head and shoulders. I will come back to the later to these other ones, why you don't have to understand these very soon. But head and shoulders and inverted head and shoulders, you should know these, especially if you are trading Bitcoin, and here's why. The reason is that these patterns repeat again and again and again on Bitcoin. So let me show you head and shoulders. So here was a head and shoulders pattern. You can draw this what's called a neckline. This would be a trend line, but let's call it a neckline because we are talking about a pattern. And here is the left shoulder. Then we go to neckline, head, neckline, right shoulder, back to neckline. At this moment, you still cannot do anything with this data except to notice like, hey, this could be a head and shoulders pattern. But after it breaks to the downside, that would be the confirmation that it has broken to the downside, and we are basically headed way more down. And how much down? The goal of a head and shoulders pattern is to take the chart from the top of the head back to the neckline in a straight angle. Now, because the neckline is a little bit angled, we had to have an angled line to the neckline here. And after it is roughly correct, you simply copy the line and take it to the breakout level here to analyze where or how low will the asset go. And here we got the target price for this move, which was roughly $16,000, which would have netted you the absolute best price to buy Bitcoin in 2022 and 2023. So this head and shoulders pattern was absolutely beautiful. It was like a textbook, except the neckline was a little bit angled. Sometimes the right shoulder is shorter than the left shoulder, by the way. They don't have to be equal like in this picture here. And if it's shorter here on the right side, it's even better because it's most likely more accurate than if they are actually just symmetrical. But anyway, this was a very beautiful head and shoulders, and it was able to give you the bottom of the bear market. Next up, let's actually talk about the inverted head and shoulders, because right after we had a head and shoulders, we immediately had a inverse head and shoulders. And let me know if you already spotted on the chart, but it was here. So let me draw it for you. Left shoulder, neckline, head, neckline, head, right shoulder, and neckline again. So this was an ugly inverse head and shoulders, but it was still an inverse head and shoulders. And here we got the price target of roughly $40,000. So let me put it here, a little bit more to the down. Right, so this was giving us $40,500. So as you can clearly see, we got the target and we went way above the target. But sometimes that can happen too. It's completely fine. We don't mind it at all. But after this target has been met, you can already forget about the head and shoulders pattern or inverse head and shoulders pattern and just move on with your life and find the next pattern because it already dealt itself. Also, the neckline of this head and shoulders pattern gave us very solid support line, horizontal support line for this price action here as well. So that was a perfect textbook head and shoulders, textbook inverse head and shoulders almost, except this head and shoulders was absolutely ugly, but whatever. It still was a inverse head and shoulders. Here we almost had a head and shoulders. As you can see, we had a failed head and shoulders. So here you can see the left shoulder, head, and the right shoulder. And here you could have been like, oh my god, it's gonna be another head and shoulders. Maybe we go to the downside. But no, this didn't complete and we didn't break out to the downside. So if you had been too quick on your action and not waited for the breakout, then you were mistaken and you could have lost all of these gains here. So you must make sure that the pattern actually completes and you don't invest too soon, or in this case sell too soon. So again, head and shoulders happening here as well. Here we almost had a head and shoulders event, but it didn't actually happen. So here we had the well, it's not even close, to be honest. It kind of looks like it, but it's not even close, so it's not head and shoulders. However, what we can see is something like this currently. So this is basically the price area, or you can draw it like this to make it a little bit better. So if we go to our chart, what is this price pattern from these options here? If you take a look at all of this, the answer is it's none of these. It's something different. But the key thing, in my opinion, is not to understand all of these different patterns here. You simply have to understand what is the trend line here. Because this, if let's say the price of Bitcoin would start crashing here, do you think it would bounce if it touched this bottom here? I think it would, especially if you find another basically supporting line at that price level to align with that price point. In this scenario, you could have a let me draw it again so it will be beautiful. So let's say price would come to this crossroad basically here. Now we have multiple situations going at the same time. We have this previous horizontal line, we have this trend line here, we have this trend line here. So it's quite likely that the price will basically stay in the box, at least from that moment, and not go further down. So this is basically how you can stack these lines together. But as you can see, I start to have a lot of lines on the chart already. So try to have less than 5 lines at any given moment. If you have more than 5 lines, it starts to get a little bit messy and you don't really understand what's going on. So in my opinion, this horizontal line is not as useful. So if you're watching my regular market updates, in 2024, you are probably seeing something like this on my charts at the moment, because these three lines just give me the most amount of information, and then I might do some like 1 hour charting or something like that. Currently, you're, by the way, we're seeing basically the normal price action, and now we're seeing some acceleration in the price here. You could argue maybe like this. So we could even go down a little bit quite soon. But we have had a nice breakout already. So maybe a price reaction back to this trend line and then back to upside, I don't know. Or maybe we just accelerate and blow off top, who knows. But this is just charting. I'm not adding any other information in the chart at the moment. But now let's actually shift gears a little bit and let's take a look at some other asset called S&P 500 index, so you can understand and see how to apply this information in real time for other assets as well. So currently we're still on the logarithmic view, and we're actually looking at data of the United States stock market or S&P 500 index going all the way back to not only 1927, but even all the way down to 1871. So we're looking at 150 years of history of the American stock market. And here we have all of the data, all of the presidents, all of the market crashes, all of the wars, everything is in this chart of the whole United States history from the last 150 years is on this chart. So you have to understand that this chart has a lot of value. So what would I do first here? First, I would find repeatable patterns. So from here, what I'm currently seeing is I'm seeing a few horizontal lines. Let me know if you can spot them as well. Even here, just a short one. And not exact, maybe, yeah, I can draw it here. So this is something that I'm seeing basically repeat on this chart. So from this, what I'm basically expecting is the chart does these nice moves to the upside. You can see this acceleration here, a blow off top, and then a pullback, a second kind of like a mini bull run, and then another crash back to that same price level. We had it here as well in 2019 and 2020. We had this major market crash. So right now, I would draw a trend line here, because it might be likely that we just have a similar crash like we had in 2020, and we go to like 3,500 level. So this would be a line I would have on my chart. Also, I would have this line again in case we would visit this price level here. But I don't think we go back to like 2008 price levels ever again, based on the history of this chart. Next up, let's take a look at some horizontal lines here. Sorry, that's a little bit off. Let's try again. So here, this doesn't give me any information, so let me cheat a little bit so I can connect this 1975, 1982 level basically with these price points here. This is not aligned 100%, but I'm okay with that. It doesn't have to align 100%, but this would be basically what I would consider like an absolute all-in zone, because in the last 100 years, this line has basically never ever been broken. We are actually seeing an acceleration in the chart here as well. So currently we can see that the chart is trending up faster like it did here. And here we had a second acceleration as well on this chart. And this would have given you like the top in 2000s. So we had this acceleration, we might see another acceleration on the chart. So let's see, can I, something like this. Yeah, it does seem like a good idea in my opinion. Let me know if you agree or not. So I would take this out. Let's take this out, so they are basically looking similar. So now the question is obviously, how far can this go to the upside? And for that, let's do something with the charts here. So let's connect the top in 1929 and the 2000 cycle top, and let's extend these tops here. What you can see is something interesting. You can see that previously when we visited this time, we had the acceleration at the top here, and then we basically broke to the downside and we had a very annoying 10 years. And right now, we're basically at the top here again. We've had the acceleration already, and you know what is going on in the real markets. So it doesn't take a genius to predict a market crash in the near term. Because how likely do you think it is that we actually break this 150-year-old historical chart to the upside in 2024 or 2025? My answer to that is maybe 10%. 90% likely that we actually crash, the market crashes. 10% chance that we go to the upside. So let's say, looking at this chart here, now is what, the September 2024, we could go sideways even until like Q2 of 2025. But in Q2, Q1 of 2025, it is quite likely that this thing will go. And how low will it go? Well, let's take a look. So here was the acceleration part, and we basically went to the midpoint of the acceleration, right? So if this was the where the angle changed, so let me yeah, roughly midpoint. I don't need to calculate it. So that was the midpoint of this acceleration would take us basically back to 3,500, which would be the same bottom as 2022. So we're looking at a market crash of maybe 30, 35%, 40%. Doesn't necessarily happen, but just looking at the chart, it looks extremely likely, right? Would you agree on that? Let me know in the chat or not. But anyway, this is what we're currently seeing on the charts. So based on this, I would at least stay away from S&P 500. I don't necessarily mean that there's going to be a market crash, but I'm going to keep this in mind going into the future, that this is a possibility and something I should look out for. And the likely pullback would be this zone here. I don't necessarily think we go all the way to 2020 lows, though it could happen, but that would be quite insane. We're looking at minus 60%. Wow, I don't think the stock market has ever had minus 60%. This was minus 56 in 2008, so not unnecessarily completely unheard of. Yeah, roughly 58%. So it could still happen that we go all the way down here as well, 2,200. That would be nice. It would be nice for the to long S&P 500. So this is when you have to understand that the media will go absolutely crazy. They will be calling for doomsday, and everybody's blaming each other. Everybody's super mega bearish they want to sell everything. And this, if this would happen, only thing you have to rely on is the 150-year history of the United States stock market is basically on your side to help you navigate and tell you it's okay, you can buy. Don't worry. Your friend who has a subjective 6-month experience of the market crash, he will probably give a little bit different take than somebody who has a 150-year history on their side. So this is why these trend lines are very useful to understand these patterns on the chart, repeatable patterns, to understand these breakouts, accelerations or blow off tops, and how to find basically these setups. And this is basically how I look at the markets. I'm not necessarily right. Sometimes I'm wrong. I don't think anybody is always right, but I hope this video helped you to understand when to basically see these opportunities, and I think I gave you a lot of valuable information. So if you want to get started with trading and you don't want to use any of your money, what I would do is Bybit.com actually has a demo account, so you can trade without risking your own capital, and you can trade in the like a short small time frame, just using 1x leverage or even spot trading, so you will not get liquidated. That's a very good way to start here. And when you are ready to start trading with real capital, you can do it here as well. Only thing I ask is you would use my link in the description to sign up here for the demo account, or if you want to deposit money here, to use that so you can support me financially as well to make more videos like this. And if you want to ask questions, or if you want to request videos from me, do that in the comments below, or join my free Discord where we discuss basically daily Bitcoin and crypto price action and things like this. So you can join there for the discussion as well. All in all, I hope this video was useful. Consider subscribing to the channel for videos like this, and make sure to like the video if you want other people to get this information as well. Thanks for watching, and I will see you on the next video. Thanks and bye bye.